maybe. Bear with us a moment. Well, we have the longer intermediate term technicals. We just want to remind ourselves, market is doing higher highs, broken out of all historical prices. We're looking at leg 3 moving to the upside. It is, of course, a higher degree. We're not showing the higher degrees, but there's been a 1 and a 2. And that leg 3 is going to be doing a 5M bracket. We have a 3 and a 4. We're still doing 5M bracket. Before we get to do that 5M bracket, we have a dot 1 and dot 2. We're still doing dot 3. The internals here will show more clearly on the, I believe, on the 45 minutes. The lower levels are showing the 1 and the 2 in yellow. We're still doing 3. We take our segregation as of that 1 in yellow. Again, we have a dot 1 and dot 2. This is yesterday's 45 minutes. We have a 1 and a 2. Again, with a dot 1, dot 2, 3, 4, and a 5, 1 and a 2. Then another dot 1, dot 2, 3, 4, A4, B4, C. We had another dot 1, dot 2, dot 3. That's where we left off yesterday. We did a trigger yesterday, targeting $72, and we got the target. Let's now segregate the current 45 minutes. This is today. So this becomes very easy to trade, seriously. Again, you want to focus on the 3 and 4 moving into 5. Here the labels are showing in white, here they're showing in yellow, but I believe the other ones are the internals of the white ones. So you have here 5 in white, 3 in white, 1 and 2 in white. The yellow ones are what is internal between 2 and, or between 3 and 5, 3, 4, and 5. We just focus on 3, 4, and we are getting a 5. And this 5 has done an internal 1 and a 2, breakout of 1 and a 2, 3, 4, and we're getting a 5. You want to buy above this level, $70.50. We check, we take this live. If you have any negative momentum on the 5 and 3 minutes, then we're going to $70.50, $70.60, $71 maximum. We take it, of course, for a projection for the current motive leg. This looks like a motive leg 3. It's like a 1 and a 2, 3. This is just a 4. And next time we go to $72.40, $73.70. So it's $73.40 and $73.70. First target of $72 was hit. We are looking at $72.50 right there. All right, let's take it to 15 minutes. We begin now the segregation from this level 3 for A, for B, for C. Now the last motive leg or growth leg to the upside. So I have a 3, 4, A, 4, B, 4, C. We have a dot 1, dot 2, dot 3, dot 4. This takes us back, of course, to that dot 3 and dot 4. Now we see it more clearly. As of that point, we've had possibly a 1 and a 2 where you have this very low intention, a 3 and a 4. That's why it's very important to buy this point, and takes us to projections are showing here. So the 45 wasn't really important, but it did show the support, the rigid support. So the best entry again is $70.60, $71. There's an internal support here, so $71, maybe we can get it. And all this is subject to the fact that we get negative momentum on the 5 and 3 minutes. If you don't get negative momentum on the 5 and 3 minutes, you're never going to get a correction, and therefore we just have to buy a market with a hedge below this point. Carry it to $73.70. Ultimate target is actually 75, but I don't think we're going to get it first time. We can get, of course, $73.40 and $73.50. From $71 to $73.40 is $2.4, which is, of course, more than fair. And the hedge is, if we're in at 71, the hedge is at $70.20 or $70.30 below this point. Let's take it live. Bear with us a moment. I have a tool here. I'll highlight what I'm trading. All right, that's it. We're looking at positive momentum on the 15 minutes, slightly inclined now, a bit weaker, but it's still positive. Take it to the 5, we get splattered. With a bit of negativity, take it to the 10 minutes, check different frames. And 2 or 3 minutes. All right, back to 15. So the splatter momentum we're seeing on the 3 and on the 5 minutes leads us to consider we're seeing this. We're going to attempt to buy top of level 1, $70.50, $70.60. It's back to where we want to buy. And we have a hedge at $69. $69.50. Yesterday we're doing the long market and the hedge at, I believe, level 3. And that hedge actually got open. The market did this. We're doing long market at this point. And the hedge, yesterday we're doing this. Just had the hedge be level 3. The hedge got opened and we had to close it at a loss and then let the market run. This shows 2 important aspects. The first is you must always have a stop on your hedge at the next relevant resistance and take the loss if the market just opens the hedge like happened here and bounces. So I would consider to always have a stop on the hedge at this point. All right. The second is, of course, you would want to widen the hedge measure to at least 2 internal supports from entry. So assuming there's doing an entry here, you want to be 2 internal supports. This is support 1, this is support 2 to stand out of volatility. This is volatility. Of course, this will decrease the size. This will immediately disrupt the econometrics, but of course, it's better in terms of win-reward ratio, or it's better off in terms of the win sequence of the trades. So in this case, the hedge should have been at $68, maybe just $68.50, $68.30, and the entry was market $70.50, so it's something like $2, which is quite high, but necessary if it's going to be a backstop hedge, and you would have to decrease size, of course. So that's the same percentage in terms of risk. when measured today. Today we will attempt to buy level 1. This is going to be $70.50 to be exact. More like $70.65. Again, if we're going to have the hedge to internal supports from entry, I'm looking at $65.65. So $70.65. That's better. $70.65. $68.65 is about $2 again. $2 again. $70.65. $68.65 is about $2. We're going to take this to $73.40, $73.77, or $73.80. So if we're in at $70.65 and we're out at $73.65, we're looking at $3. That's it. And the risk, of course, is $2 to the downside. That's one way to go about it. I believe we may only get volatility to the upside. We may not get any volatility to the downside or any volatility at all. So we could consider to use a buy stop again, just like we keep doing. But if we have buy stops in other issues like Bitcoin and if we're using buy stops on Bitcoin and sterling yen, we believe this is enough of risk. We will consider to attempt to take entries $70.60 or $70.65, all right, on Friday, if possible. Or once we have reversal out of negative momentum on the 5 and 3 minutes, and we see continuation of the current positive momentum traction on the 15. There's no other negative momentum except on the 5 and 3. Everything else, of course, is positive, very strongly positive. All right, 45, 30. All right, so the only negativity is on the 5 and the 3. And we're doing an A, B, and a C. We can see this, so we don't want to buy negative momentum until we get to the bottom of C. $70.85 is 161.8. $70.60 is in between 200% and 161.8%. We're looking at this level here. $70.60 very likely, definitely going to be seen. Again, I don't think we will be in a position to buy it except on Friday, but nevertheless, it is of course necessary to do the planning so that we are in a position to buy on momentum reversal. Top of level 1, of course. If the bounce comes in earlier, you can immediately tell that you buy the specific top. The edge just below it, two internal again pivots or two internal supports from entry. So if we get a bounce out of $70.65. We can buy $71. It's the support here, and the hedge is $70.30.